Former President Donald Trump has sharply criticized Federal Reserve Chair Jerome Powell, declaring that his termination cannot come fast enough. President Donald Trump, on Thursday, really ramped up his criticism against Federal Reserve Chair Jerome Powell, calling for his termination for, not cutting interest rates quickly enough. His comments come just one day after the central bank chief delivered a pretty stark warning about the impact of Trump's sweeping tariffs on the economy. Trump's first remarks on Powell appeared early in the day in a social media post. But the president kept up his attacks on the Fed chief later Thursday, during an Oval Office meeting, increasing the political pressure for Powell to lower interest rates. Ahead of an expected rate decision Thursday by the European Central Bank, Trump lashed out at the Fed leader, saying the U.S. Central Bank is, well, lagging behind. The ECB later announced it is cutting interest rates for the 7th time in the past year. Jerome Powell of the Fed, who is always too late and wrong, yesterday issued a report which was another and typical complete mess. Trump wrote, "Powell's termination cannot come fast enough." These comments follow Powell's remarks on Wednesday, when he said at an event in Chicago that the Trump administration has brought very fundamental policy changes, including sweeping tariffs that are, quote, significantly larger than anticipated. He said such changes are unlike anything seen in modern history, putting the Fed in uncharted waters and facing a challenge it hasn't encountered in decades. But Powell's words weren't all that different from those of other Fed officials in recent weeks. Most have said Trump's tariffs are likely to push up inflation and unemployment. Powell has carried out the Fed's monetary policy by making decisions that depend on economic data, striving for the central bank's dual mandate of maximum employment and stable prices. The European Central Bank, which focuses only on price stability, also uses a data-driven approach like the Fed. Let me just say very squarely, I have a lot of respect for my esteemed colleague and friend Jay Powell. We have a steady, solid relationship amongst central bankers, ECB President Christine Lagarde said Thursday in a news conference after the central bank announced its latest policy move. I think that relationship is decisive in order to have a solid financial infrastructure on which to ensure there is financial stability. Meanwhile, some billionaires, such as Ray Dalio, have taken criticism of Trump's tariffs a step further, saying the U.S. economy might be in or near a recession already. Powell was first appointed as Fed Chair by Trump in 2018 and was later reappointed by President Joe Biden in 2022. His current term ends in May 2026. Trump has, on several occasions, threatened to remove Powell from his post and, his criticism of his Fed head really stretches back to 2018, when Powell took the reins of the world's most powerful central bank. The Fed raised interest rates a handful of times that year over worries that a historically tight job market could spur higher inflation. In 2019, Trump even called Powell the enemy. In March 2020, Trump told reporters he had the right to remove Powell as chairman, and that he has, so far, made a lot of bad decisions in my opinion, after markets tanked amid the pandemic. But he also praised Powell for cutting rates to zero to prevent an economic collapse. Powell will be, quote, out of there real fast if I want him out, Trump says. Trump doubled down on his criticism of Powell while taking questions from reporters in the Oval Office Thursday afternoon. I don't think he's doing the job. He's too late, always too late, a little slow, and I'm not happy with him. I let him know it. And if I want him out, he'll be out of there real fast, believe me. We have a Federal Reserve chairman that's playing politics. The Fed really owes it to the American people to get interest rates down. That's the only thing he's good for. I think at some point he will. He's going to have a lot of political pressure. They are political also. And I think there's a lot of political pressure for him to lower interest rates. The Fed declined to comment on Trump's latest remarks. But Trump's desire to fire Powell is at odds with the view of his own Treasury Secretary, Scott Bessent. Earlier this week, Bessent told Bloomberg in an interview that, monetary policy is a jewel box that's got to be preserved. During his confirmation hearing in January, Bessent told congressional lawmakers that the Fed should remain independent. Doing away with it would not only rattle investors who are already anxious about Trump's tariffs, but it could destroy the central bank's credibility, which it needs to fight inflation. That's as important as ever, with economists expecting tariffs to lead to higher prices. Countries with independent central banks generally have lower inflation. For his part, Powell has pointedly noted that removing a Fed chair is, well, not permitted under the law, and has said he intends to serve out the remainder of his term. However, that legal protection, which comes as a result of the Fed's status as an independent government institution, may be an open question. Trump has fired 2 Democratic members of the Federal Trade Commission, also a long independent agency, arguing that their continued service on the FTC is inconsistent with my administration's priorities, according to a Wall Street Journal report of a letter Trump sent to them. On Wednesday, Trump fired 2 Democrats on the 3-member board of the National Credit Union Administration, a federal insurer and regulator of credit unions. Todd Harper, one of the officials dismissed by Trump, said in a post on LinkedIn that his firing is wrong. It violates the bipartisan statutory framework adopted by Congress to protect credit union members and their deposits. The Trump administration's attack also undermines the independence, balance, and important work of the NCUA. If a president can fire an NCUA board member at any time, how will we maintain public trust in our nation's financial services regulatory system? Meanwhile, the Supreme Court is expected to revisit a case that could severely weaken the Fed's independence. The 1935 case, Humphrey's Executor v. United States, established precedent over just how much power a sitting U.S. president has in removing agency heads. The case involved William Humphrey, who was, an aggrieved conservative commissioner on the Federal Trade Commission. He was fired by Franklin Roosevelt in 1933 over policy differences, according to the Brookings Institution in a 2018 analysis. Humphrey died shortly after his dismissal, but his executor went ahead and sued for damages. The court ended up ruling in favor of the executor, saying the Constitution does not give the president the, quote, illimitable power of removal, and in February, the Trump administration actually said the case should be overturned. In addition to those FTC firings, Trump also fired a Democratic member of the National Labor Relations Board and another person serving on the Merit Systems Protection Board who identifies as a Democrat, both of whom have, sued for their jobs back. Chief Justice John Roberts asked both sides to submit briefs just last week.